Hey everyone, you're listening to the Active Turnkey podcast, a podcast designed for hands-off, passive real estate rental investors. In the Active Turnkey podcast, you'll hear Tom Olson and Jared Stoltmeister discuss all things turnkey rentals with other turnkey providers, service providers, and rental investors. Our goal is to help you reach your financial freedom and whatever comes after that. Let's go. Hey everybody, welcome back to the Active Turnkey podcast. I'm your host, Jared Stoltmeister, and I have Tom Olson with us. So Tom is actually fresh off the job.
Yes.
I mean, he is...
We just left a job, and Jared's son actually works for us, and I was giving him some instructions, and I was trying to get my 6-year-old to work. It's kind of not working.
Yeah.
So we're just going to leave it at that. But hey, I have this new Olson Group cup today. See this, audience? This is something...
So don't pay attention to Tom, pay attention to the cup is what he's saying. Yeah, don't look at him.
There's actually nothing in it, but just kidding.
Yeah.
Those I've actually been on a podcast before where somebody had a cup and he kept doing it. I'm like, there's nothing in there. What are you doing? There's actually something in this
It's
cup
quite
today.
distracting in that sense, I think. Yeah.
Yes.
So yeah, Tom's with us.
We have a special guest today.
We do.
Exciting.
Yeah. So we haven't had too many special guests at this point. We've had a couple lenders, but this time we have a special guest, and he is an investor. So many of you are investors, and so we have Tanaka here with us. And he's an investor. He's been doing real estate here for a little bit of time, and he's also kind of interestingly a property manager too.
So and a lot of what we talk about in our podcast is property management related. So, we thought we'd have him on, so he can kind of help our audience know like how his experience has been as an investor, but also maybe even give you guys some tips if you're managing your own properties or if you're looking for a property manager elsewhere and you're not in our local area.
Yeah. So his perspective is going to be different. I'm really looking forward to hearing that. So welcome to our Active Turnkey podcast. Thank you for joining us today.
Thank you for having me today.
Absolutely. So we have several questions to get to you, and of course we want to get into the actual turnkey side of it, to get in the rentals and all that stuff. But first, tell us a little bit about you, your family, and what you do.
Yeah. So I have a wife and 2 kids, and currently I do invest some in Illinois, and but mainly in Northwest Indiana. And I also do property management, and also I do, I'm a realtor, so sometimes I find a place for tenants or help people find houses.
So you're a realtor and a property manager, mostly in the Illinois side, right?
That is correct, yes.
That's what I thought.
Yeah, so it's always very interesting. What were you doing before that? Before you got into real estate, what were you doing then?
I was in the automotive industry, and at some point I was trying to switch to do real estate full time, and actually I was in the process of getting a license, real estate license. I got the license, and at that point the company was kind of going down, and then I got let go. Oh, wow. So it kind of worked out fine, and ever since I'm doing this basically full time.
I was going to ask you how you kind of made that decision, because that's normally something that some investors, that's a question that they want to do. When do I go full time if it's something they want to do?
Well, I thought So brought up a great point, like have a plan B. Like you never know when that time's going to come. And
true.
Just think if So would have waited a couple of years before he started thinking about that plan B for himself, he would be 2 years behind. And now, like maybe it's not perfect. I don't really know his full situation. I just know that he's been an investor of ours for several years now. So, I think it's definitely, something that to always bring out is to have a plan B. And even if it's not real estate, that's fine, but just have a plan B and be thinking about, what else you be able to do. And even think about like 2020, like how many people out there are thinking right now, man, I wish I had a plan B. I wish I had, for me personally, in my own personal story in 2006 was when I had to kind of readjust and completely change everything. My whole life was just completely uprooted, completely change everything I was doing. I was glad that I had other things going on, other streams of income, other ways that I could make money. But that's awesome.
So now, was this just out of curiosity? Was this something that you were actively doing because you saw the company, or it just kind of worked out that way, where you were working on this, and then over time the company started going down? Is that how it worked out?
Well, I was already working on acquiring rental properties. So at that point, I had some rental properties, and during that time, I wanted to start my own property management company. So that's kind of what I was doing. And I was about to quit, actually. I was thinking about quitting. And then before I got to the point, I got let go. So in a way, it worked out fine.
So tell us how you got into real estate. So actually, you said you were investing before all this was going on. So how did you get into that? You know, what did you see? Did you hear somebody? Did someone recommend you start doing it? How did you get into real estate?
So it's like a lot of people. I was reading, I read the book Rich Dad Poor Dad, and that just completely changed my mindset. And something you don't know, I used to play poker. And when I was playing poker, I should have known. I made some friends, and some of the friends, wealthy friends, they were all doing real estate, different real estate. Some people were doing single family, some people were doing multiple apartment complex. One guy was doing just a one big apartment. So the real estate was, it was very, very attractive to me. I got very attracted to real estate.
Well, it's interesting you brought that up. We just brought this up in the last podcast or so. Like most wealthy people, you look at the top 1% or top 5% of people, and you look at where they put their wealth and where they put their money. I think there's this like allure, this like, shining lights. Everybody thinks they're putting all their money in the stock market, and it's not really true. They only have like 25% of their money in the stock market, and like a larger percentage of it, 26, 28, 30% of their wealth is in real estate. So I think that's awesome. So I actually always go to a big conference every year. So maybe I should invite you with me this time to Vegas to the American Association of Private Lenders. That'd be a fun trip. And I'm not a big poker player, but I can see how somebody else could have fun doing that.
That's great. Yeah, we did.
I
not
can play
know
poker.
that.
I know how to play, but I'm not really into the whole gambling scene.
There's a reason I don't play poker anymore.
I was thinking of myself as that was coming out of my mouth. Maybe I shouldn't be saying that. Maybe that's something he shouldn't be doing. I don't know. Yeah. Maybe there's a reason why he doesn't play anymore.
I don't see any trophies or like world champion.
No, I don't have anything.
Which I'm sure if you had them, you'd be displaying them for everybody to see, right? That makes sense. Okay.
So gambling is not the way to financial freedom. Is that what you're trying to say?
Well, this is kind of the off topic, but there are gamblers who make living in, it's been, 15, 20 years ago that I was playing, but I have a friend who still does poker for a living.
Wow.
So it is a way to go. It's just a grind.
Oh, sure.
There's no leverage,
It's just like property management.
Yeah.
But if you enjoy it, I don't have a problem,
Sure. No, that's really interesting. And of course, I didn't know that about you. So that went in direction we weren't.
It's interesting you say that though, because I shouldn't say a lot of our buyers, but I do have some of our buyers and people I sold houses to over the years have either been in that and now they're out of it, or they still kind of, but it's like you said, like you kind of have to almost know the odds, kind of play them all the time, and you have to stay in it, or like you figure, or just like when you're up, leave and be done. So that's just interesting.
Now, real quickly before we go further than that, you had mentioned some of your buddies that you would go and play with were doing it. Did any of those guys give you any insight? Did you ask them questions? Was there feedback on that where maybe someone was kind of bringing you along, or you just kind of listen in and have them take you there?
Yeah, sometimes when I have a question about management or whatnot, I sometimes still reach out to and then ask questions. I used to keep in touch with them more, but right now it's getting limited. But they helped not so much about the technical side, but just perspective, right? They play poker, they have money to play poker, and they have a freedom, and that was very attractive to me.
Sure. That makes a lot of sense. So now let's get more into how you found specific areas. So first of all, how did you hear about Northwest Indiana? What, did you see some deals? Just for perspective's sake, how did you find Northwest Indiana?
So this is just my philosophy, but I think it's a good idea to diversify. And, the friends that I was playing, they did not diversify. They all had one location, and they became very successful. So I know that that's possible, but it's just me personally. I like to have it, my portfolio in different locations. And I'm from Chicagoland, so Northwest Indiana is right there. So it is kind of different market, but it's still not too far that I cannot visit. So that's one of the reasons that was attractive. And eventually I found out more about Northwest Indiana, where it's a landlord friendly compared to Chicagoland. And price is reasonable, property tax is cheaper. And I'm just comparing to the Chicagoland.
Sure.
So I found it to be a very attractive market to own buy and hold rental properties.
It's interesting he says that, because that's actually like one of our selling points.
Sure.
That, whenever we talk to people, a lot of times people are either coming from a completely different area or they're coming from Indianapolis. And we're like, I can beat Indianapolis almost 100 times out of 100 because of exactly what you just stated. We get to compete with Chicagoland. Right now you have no idea, especially with COVID, how many people are moving. And I got 3 phone calls this week personally, and I don't ever normally field these phone calls.
Sure.
So I know if I'm getting people referring people to me, and we don't have properties to rent to them.
Yeah.
It is definitely something that, and I think that there's lots of, I shouldn't say lots, but there's probably other pockets like this. It's just kind of rare that a really big city is like right next to 2 different states, and one state's so much better than the other state. So the only other city that I know of that's even similar would be down in Missouri. There's 2 actually areas, one St. Louis, and then you also even have Kansas City. So you kind of have like both of those areas where they're like literally right on 2 different states, and one state you can kind of arbitrage because the one state may have much landlord friendly laws, their taxes might be cheaper, and but you're getting the benefit of the metro and all the population there. So I think that's interesting that somebody from the other side actually said, oh wow, I'm comparing the 2, and I even live in the part that's probably not as landlord friendly, and I even admit that, hey, this is an attractive place to invest in.
Now, you had mentioned in our conversation, so you had talked about the idea that, you mentioned diversification and that you want to be in different markets. How do you make that decision? So that's one of the questions we want to talk about, is how do you evaluate? You mentioned a few things, but what are you looking for to evaluate a market and where you want to invest?
Yeah, so I know you guys now. So now I have something to compare. So when I go to the new market, actually that market needs to be better than you guys, because it doesn't matter how much research I do, it's not perfect. So I'm taking some risk when I go to a new market. So if I feel like it's same as you guys, or maybe a little bit less than you guys, then I'm taking too much chance, in my opinion. So I have to find somebody who I feel like at least equal, or probably better, and that's hard to find.
Well, that's very interesting.
Well, I would have to agree to that.
In my experience, yeah. No, that's good.
I do know some people. So, and I know that you've emailed me a couple of times. I do know some people around the country that I would personally vouch for their integrity and their, and I would, if it was me, like I would invest with them. And there's some of these people I have personally invested with, and I do trust. So if I haven't given you that list, just I'm not going to talk about that live here, because this is the Active Turnkey show for Olson Group.
Correct.
But honestly, like I do want to help our investors and help them reach their goals, and if that means making a connection to somebody else, I would be happy to do that. So
I appreciate it, and it's not just about obviously the people who are running, but the properties too. In certain areas, the return is not good as Northwest Indiana. So then let's face it, the point of it is to get a good return. So it needs to be good return and good people, and it's getting kind of harder and harder to find those people, those areas.
That's really interesting how you put it too. Just the idea of I guess I wouldn't have thought of it that way, but so as we'll find out, so is very analytical, and so we have these phone calls at least once a month. We're talking through deals and what's going on. But But to think of the idea, he doesn't need a place that's as good, or he needs it to be better for it to make sense. That's just an interesting perspective. So along that line, we talked about evaluating a market. Now, how do you evaluate a provider like us? What are you looking for? What's important to you? What have you seen as you've talked to other providers that maybe you didn't like, or things you like better? What are you seeing in your experience as you've been trying to find other opportunities?
Yeah, I think a lot of other providers, they can't, especially these days, they can't sell properties that cash flow really good. So they kind of try to sell it from the appreciation perspective. Hey, this is going on, that is going on. Yeah, you're gonna give up some on cash flow, but hey, you're gonna get appreciation. And appreciation is important, but I bought the first house in 2005 for $150,000, and I sold it for $155,000 in 2019. So like 14 years later, it appreciated $5,000. And when I bought it, the market was hot, like right now. So to me, appreciation is not something that I can predict. Although it is very important. I look back at my properties, how much I paid, what is it worth right now, and I want to make sure that it's appreciating, because if the property is flat for year after year after year, I feel like I'm missing out on the appreciation portion.
It's really interesting because, we have that opportunity here. So we talk how rare it is to have an area like a Gary where we know today it's cash flowing, but we're seeing the appreciation numbers that houses that were selling a year ago for 50 are selling for 65-ish, 60, 65. But I think you're absolutely right. I think it's a great approach. And usually that's how I'm selling when I'm working with our investors. When we're working together, I'm telling them, hey, the best approach to be is these are cash flowing well today. And so that's really the only information you have. We can look at trends. We can look to see what's going to happen down the road. But are they really cash flowing well? And really everything after that is just bonus, right?
Well, at the end of the day, it's either your timing or you're back at the casino again. I mean, that's really what you're playing. So like it can be an amazing market, and you might be thinking the only way we can really predict appreciation is always off of like the past. The problem is the past doesn't really predict future appreciation. In fact, sometimes it's actually a really bad predictor of future appreciation, because like the bubble's already been inflated. So for the last 3 years, if an area has been up 10%, and there's many areas like that around the country, the only way that you can track data and look at it, you think, oh, this is a great area. Well, that might be the time to sell that property, because like it may not have any more that area can give. Now, I don't necessarily think that we're there in our area yet, but there are some areas like Maryville, for instance. We used to sell a lot of turnkey rental properties in Maryville. But we were selling these at like 80, 90, 100, 120. And nowadays, like those same houses are 180, 160, 170, 180. I don't think that that's a good turnkey rental property. Even though it was 3 years ago, I don't, maybe even 4 or 5 years ago, I would say. But nowadays, like that, unless you can get, and there are some houses in Maryville that are still in the 120 range, and those I think are still, there's still meat on those to appreciate. But you have to, I agree. I think you want to have both, but the only thing you can really go off of is if the worst, I always look at the worst case scenario. So if the worst case scenario happens, am I still happy? And I think that cash flow is what holds it together.
Yeah, and many turnkey providers like us, we have a small section above our performas that shows like a 10-year picture. It's just a snapshot. And we just had a couple investors ask us about that section. And in the end, I told them, hey, this is what the deal looks like, but that information is based off today still. It's based off the information we know about. And that's, in most cases, that's what you really want to base your decision off when you're choosing a property, is what you know as far as those numbers. So actually, let's get into that, transition into a property. So when you look at a deal, if you see a deal come through your email from whoever, from us or from somebody else, what do you look for? What's important to you? How do you evaluate that deal?
Yeah, so two things is, I just want to make sure that there's a cash flow, obviously, $200 or more. And also $200 is not a good cash flow if you have to put $1 million in. So I just want to make sure that the cash on cash return is good. I look maybe 10%, make sure that it gets more than 10%. And then, most of the properties that you guys provide are like one of those smaller house with 3-bed, 1.5 bath. Those are the houses that I like because it's less maintenance and it has demand. So, those are the things that I basically looked at it.
What are some things that kind of scare you off? What are your concerns?
Scares me off. Like, what do you mean? Like,
well,
what kind of properties I will not buy?
Yeah, like if a deal comes across, what are some things that jump out at you that kind of give you a little bit of a hesitation?
Yeah. If the numbers are not good, obviously, I'll hesitate. And if the house is too big, I don't like big houses. I guess those are the things that I sometimes, pass.
Yeah. So, and everybody looks at things differently. Absolutely. Because, with the smaller house, like the chance of appreciation is not as great as the larger house. But he brought up an amazing point, and it's one of those points where, like, I have known this for years, and in my own personal portfolio, I've always thought this way. Like those little tiny 1,000 square foot, 3-bedroom, 1-bath slab houses that have almost no major maintenance that happens to them. You don't have to worry about flooding. You don't have to worry about mechanicals. For the most, you don't have to worry plumbing and electrical. They're all in the ground. They're going to be good. I mean, you can't guarantee it, but things could happen. But like the normal wear and tear you don't get in some of those small houses that you do get in the larger house. And guess what? It just is what it is. And even my own kids, I mean, I've got 3 kids and we've got a 5-bedroom house, and they're a lot harder on a bigger house because they got room to roam. So like at the end of the day, like those larger 4-bedroom houses, what do you have? You have those families, and I'm not against family. Like, trust me, I'm very pro family, but like, as far as from an investment standpoint, you definitely, have the possibility of having to do, repair holes in the walls or, crayons on the walls or whatever the case is. And even, a lot of times those larger houses have basements, and sometimes that can be something that could, create more maintenance.
Well, your turnover costs, every couple of years, your paint costs, it's double, when you're looking at the square footage cost. The other thing to think about is, so it brings up a really good point, and Tom had just said it, but we've seen that in action. So we've seen investors who had the larger homes who were able to cash in, and a couple of them actually did some rehabs on it, and sold it on the open market. They were able to kind of benefit from the market being up. However, that was never at least it wasn't their intent to begin with. And so really the 3-1 that so I was talking about, the 1,000 square foot, that is the long play deal. And it works according to the plan. And really the way you could look at it is, hey, if it works out the other way where there's some crazy appreciation and everyone wants this house, then maybe that's just bonus gravy again. So all those different ways to look at it. Now, let's move along here. And now we would, of course, like to hear feedback from you from the perspective of a customer or a client of ours, somebody you worked with us for quite some time. And so what has been your experience? What can you tell our viewers and listeners about Olson Group, about Olson Property Services, our property management company?
Yeah, so I interacted with you guys many times, and we went through some challenges. We had some challenges also, and everybody that I talk to, I can completely trust. I can say from the bottom of my heart that you guys are good people, working hard to make it happen. So that's something, something I really like. I can trust you, and then good people, and then obviously you guys have a knowledge also. And when something happens, you guys work with me. You're not gonna just have one way to do it and then take it or leave it. If there's something going on, you always work with me. I'm guessing that's what you do with everybody else. And sometimes Tom, I'm sure you're a very busy guy with a lot of things going on, but if I have questions, I'm trying to be respectful of your time. But if I have a question, if I shoot you text, email, you always answer very quickly. And maybe I shouldn't say that in podcasts now.
No, actually, I don't mind at all. Like I even give away my phone number publicly in groups. I think sometimes, the more people that have your number, the less people you call, less times people call you. But like, what I don't want to get is like telemarketers. Somehow I got on all these telemarketers lists, I think, but I actually appreciate that. And, I do want to know, how we're doing. And I want to be able to help. And everybody's going to have a challenge. Everybody's going to have something where like it doesn't make sense and they got to dig a little deeper. And, sometimes it's even on us. Sometimes we got to dig a little deeper. Maybe we didn't dig a little enough deep enough. And we got to ask, that sometimes we need that. And we do need to be, held accountable at times to making sure that we are doing the best that we possibly can. Or, sometimes will even, just send me an email and say, hey, I don't know if you thought about this. Yeah. And I actually really appreciate that because, to me, the way I look at it is like the more people that are trying to help my business, the better my business is going to be. And, bigger isn't always better, but better is always going to lead to bigger. And, at the end of the day, a big business is a big business. It's not really like what we thrive for, but we really do want to be better. We want to give the best experience we possibly can. As far as on my end, and I don't work with So as much as Cheryl and Jared does, but every interaction I have had with So, I think a good property manager a lot of times can also, I'm trying to like word this properly without being disrespectful to certain people, not So, but like, I think So is very respectful. He even said like, I want to respect your time, but this, like to me, like that goes so far with your property manager. And sometimes like the people that just come at it with like, you're stupid, what are you doing? I'm like, you haven't even asked a question yet. You don't even know, half the story. And we don't get very many of those, probably like 1 out of every 100. It's probably, the 1% really bad rule. But at the end of the day, having good owners has a lot to do. So you as an owner have a part in this. And I think So has taken that as a serious role. And I think that's why So has done pretty well because he's taken his part in this very serious. And he even though it's a passive deal, he's still a little bit active in it. And I appreciate that as a property manager and owning the property management company. And I even appreciate it as a fellow investor and as a fellow, just having that camaraderie.
Yeah, it's interesting perspective. Tom has said this over and over again when he's talking to investors, clients of ours. He tells them, hey, we're not perfect. And really no property management company is. And of course, in many cases, they may market themselves in that way, but we're not. But I just had an investor recently where, it was his first deal. We had an issue with an appraisal and his perspective was awesome. He came back and said, hey, you know what? I want to see how you guys respond to this because a lot of times you can tell a lot by somebody, not how well things are going, but when things aren't going well, that's when you can really find out what somebody's made of and what kind of people they are. So I think So has had the opportunity to see that in action. He could tell us today that he could tell you guys that we're not a perfect company. However, you can speak for yourself, but the opportunity to see us, if something came up that was our responsibility, how did we respond? And then getting through that, and then at that point, that's where I believe the genuine trust is created. What do you think, So?
Yeah. So, I try to be respectful for what you guys doing. So I almost never, when you say it's going to be $100,000, I'm not going to like beat you up and try to make a deal out of it. Basically another good thing about your company is basically I can buy a house like I'm buying a pizza, I can just call you, Jared, and say, hey, what kind of pizza you got? And then you're going to tell me, hey, I got this, and then I just kind of look at the numbers and they say, okay, I'll take that pizza. And then that's that we got to that point. So, I mean, I used to always go to the property to kind of look at myself, but right now I don't do that. I don't even do that anymore. So, and that's great. And every time I look for a reason not to work with you and try to go to a different provider, I can't find it. So I always come back to you guys.
It's true. It's true. He did tell me that. And that's interesting because, and it makes a lot of sense. If you're local, you feel the tug to have to go to the house because you're there. So you're going to be naturally that somebody's going to want to be on site. They're going to walk through, see how things are progressing, all these different things. And actually, you're absolutely right. You still come into town maybe once every 6 months or so to see what's going on. But you live an hour away and it's been a while. So maybe we should get an actual pizza together sometime. Yeah. Yeah. So, hey, last thing. So, what do you tell somebody who's a new investor, what do you tell them to look for? You've been doing this for quite some time now. And again, you have that added caveat here of actually being a property manager. So from that side as well, what are you telling them? What should they be looking for? What should they be looking at as they're looking to get into real estate investing?
Yeah, I think that's a very, very good question, but I think it's a difficult one. I'm going to make assumption that if somebody has a full-time job, no knowledge, and no desire to send 1,000 postcards and go to 20 networking events, and if somebody just don't have time, Turnkey company is the best for those people. And then you guys are not the only turnkey companies, but I think one of the best, in my opinion. So for those people, they can look for a turnkey company so that they don't have to, learn the laws and regulations and manage the rehab. And it's possible to do those things. And if you're successful, you might make more money than buying from a turnkey. Especially, you might build some equity, but that's a long way, and that's not a wrong way to go. That's not it's not that I'm not recommending. I mean, if somebody wants to go that route, go ahead. But for me, and I think for many people, time is important. If I try to build, an investment company from scratch, forget the distance, but it takes time, and trying to manage the contractors, start managing properties, tenants, and everything. That's a lot of work, and it takes a lot of time, even if you can make more money.
Yeah, I love that. And I tell people all the time, you can go out and do this yourself. 100, you can do everything yourself. It is almost a full-time business just to acquire properties. And then it's a full-time business to rehab properties. And then it's a full-time business to manage the property. So if you want to figure out how to do all that, like, more power to you. And I really honestly mean that. Like, I actually think it'd be totally fine. But if you are, we had to make a decision, who do we want to manage for? And, so for us, like, one of our criterias is if you are really like one of those active investors, and you're the part-time person, and you're buying 50, 60 houses a year, and you're wanting to manage rehabs, like, we're not the property manager for you. We don't even want to manage for those people, because honestly, I don't bring as much value to them as I bring to that passive investor that just knows they can have exactly what what's so said, and that's trust. At the end of the day, like, Stephen Covey had a book, The Speed of Trust, and there's a reason why, things move so quickly when there's that trust built, and that trust does take time. But at the end of the day, like, you have to learn all this stuff. You can do it yourself. I actually believe anybody that wants to do it can do it themselves. They can be successful at it. But if you're going to, most times, I should say most time, a lot of the time, it's way better to just keep your job and make your money there where you learned your skill, where you learned your trade, whether it's being an attorney or an engineer or a dentist or a doctor, or whatever it is that you do. A lot of times you can make more money doing that than it is by going and doing this. To me, I look at like changing my own oil. I don't change my own oil. Could I change my own oil? Absolutely. I have done it before. I know how to change oil. I don't even mow my own lawn. Could I mow my own lawn?
Of course you could.
Absolutely. But I don't do it. Why?
You've done it before.
Because I have done it before, yes. But I don't do it because, like, it's not worth my time, So I think that so brings up an amazing point there, that really time is money, and you should know what your time is worth. And if you're really only getting, I think with the value you get for the difference in how much you'd be to do a property, you'd be shocked to know that you more than likely make more money at your job.
That's an excellent point. I mean, I'm kind of getting into that myself a little bit, doing my own deals. You find a great deal, and then you try to be we talked about in a previous podcast where you try to be the guy on site when you're working your full-time job, and things take longer and it costs you more money and all those different things. It can be done. But it's just, there's a lot of moving parts there. And so that's definitely an interesting perspective. So we really appreciate you having you here on the podcast.
Thank you so much for your time.
Thank you for having me.
I always appreciate it when people invest in our community. So thank you so much. So
yeah, that's one thing I can say about, so he's constantly asking about Gary, and he asks me, is it still bullish, Jared? Right? That's what he says. Is it still bullish? And of course I'm like, of course it's still bullish. So, but he's also aware of what's happening, and he's conscious that in fact, he sends us different things he's seeing about Gary, asking us questions about these different things. And so he's engaged in what's happening in the areas that he's investing in. And so that's really exciting to see that. So, hey, thank you for joining us here on the Active Turnkey podcast. If you're actually interested in...
I think So's got one more thing to say.
Oh, you have something? Did I interrupt you?
No, I said I appreciate it, having me. Thank you very much.
Oh, definitely. It's definitely been great to have you. Yes. And again, you're our first turnkey investor. So
all right.
That means a lot.
It's been on the podcast.
Yeah, it's been on the podcast. Right. If you're looking to get started into acquiring turnkeys, we do build rental portfolios for investors. So you can reach me at jared@buyolsongroup.com, or you can go to our website at buyolsongroup.com. And
yes, and we did talk about the Active Turnkey.
We did not.
So we are going to be in the next couple episodes. We're going to make this super easy for you guys to actually get a copy, an ebook copy of the Active Turnkey book, The Best Way to Buy Rentals. But if you guys would like a copy if you just want a free copy of the ebook, just email Jared at jared@buyolsongroup.com. If you actually do want to purchase this, you can go to goodsuccess.com and buy this at my other company that has this at there. So, but we're doing some work on the Olson Group website, and it's exciting. I'm actually excited about the stuff that we're doing, and we're going to have that in there. So
awesome. Active Turnkey,
the best way to buy rentals.
Thanks, guys.
Olson Group Network makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Unless specifically stated otherwise, Olson Group Network does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. Any third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of Olson Group Network. Olson Group Network assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with the applicable laws of such materials and/or links referenced herein.